My personal dividend growth portfolio is now over $205,000 in value. And when I most recently updated you on this portfolio back at the start of November, the total value was only $191,000. So this account is up 14 grand in the past month, and I only added $840 of new stocks, so the market has been ripping. My overall portfolios just reached a new all-time high of over $300,000. So I thought this milestone was a good time to reflect on my investing journey, as I only started this dividend portfolio 5 years ago. It was December 2019 when I first learned about a dividend investing strategy and started building out this portfolio. And I learned a lot along the way. Since May 2020, I gave an update on this portfolio, and you guys see all the mistakes and big wins I had in that time. I publicly shared me growing this portfolio from $30,000 all the way up to $205,000. And I have to say, I think it was a good decision to start this portfolio. 5 years can fly by, and now I'm starting to have a little bit of a chunk of change working and making money for me. And there's inherent momentum and compounding behind it. This portfolio pays me over $4,500 in annual income, which I continually reinvest to increase my shares, increasing my future income in a virtuous cycle we like to call the snowball effect. And to demonstrate why this matters, I'm going to forecast 35 years of compounding with my portfolio. I'm going to be doing that with my free future projection tool on dividenddata.com. Although that is meant to forecast individual stocks, I'm going to hack it a little bit to put my whole portfolio in. So let's say my whole stock was a portfolio with its current value, and it paid an annual dividend of my $4,551. And let's say I expect a dividend compound annual growth rate of 8%. And I do follow a dividend growth strategy, so a lot of mine are in that 10 to 15% range, but you have to think about it in terms of weighted. So a lot of my higher dividend payers are not as high growth because they tend to be higher yield stocks. So that would lower the weighting down a little bit. So I'm being pretty conservative with my 8% here. But in my strategy, I'm also aiming for strong total return. So let's put it at around what the market averages, 10% a year. And let's put in that I'm buying my current portfolio as if it was a stock. And I will be showing the impact of reinvesting those dividends over 35 years. At the end, this portfolio would be a value of over $11 million. And that's with no additional capital added. In reality, I'm going to continue investing new money into this account. Just from this portfolio, I would be earning $103,400 of dividends. That's a six-figure salary from my dividend portfolio. If I add no new money to this account, I'll be getting 50.4% dividend yield on my initial cost invested. But it's actually much higher because I did not even invest $205,000. This dividend account has been funded by $123,000. So in reality, that'd be more like an 84% dividend yield on cost. The power of long-term compounding is pretty crazy. And a lot of that comes from dividend reinvestment. If I did not reinvest my dividends that entire time period, my total value would be $6.6 million. So that's like a $4.5 million gap. And the longer you reinvest dividends, the bigger that gap will get. And again, I'm going to continue investing new money into this portfolio, so the results will likely be far greater than that. And now that I'm looking at this, I should probably make a version of this calculator where it's meant for your entire portfolio, or maybe even a future projection tab up here. But anyway, 5 years go by, and all of a sudden I have a $205,000 portfolio just compounding money in the background. And this really was not that difficult to do. I just consistently invested a few $1,000s a month and made it a priority. And if you follow the channel, you know that I'm very into individual stock analysis. And over the years, I've shifted my portfolio to be focused a lot more on total return and dividend growth. But that's because I'm young. I'm 25 years old. I have a lot of compounding ahead. I'm going to be reinvesting dividends, and I want to find companies that I can be in for the long term. I invest in high quality companies with fast growing earnings, free cash flow, and of course, a consistently fast growing dividend payment. However, that means some of my top stocks are low yielding. And so far, my portfolio has only paid me $4,000 this year in dividends. There are other types of dividend investors where they're focused on high yield and optimizing for income right now. A lot of times this is related to the financial independence, retire early, the FIRE community. And that is a valid strategy. If I put this all into a stock with a 10% dividend yield, then I could be getting $20,000 a year in income. A lot of the times these people tend to sacrifice long-term total return though, but there also are some really high quality, high yield dividend stocks that reliably raise their dividend payment. I have some of those in my portfolio too, such as the Altria Group, ticker symbol MO. I have a 9.51% dividend yield on cost, and from reinvesting my dividends, I have earned 84 more shares of the company, giving me an 11.23% yield on my initial cost basis. My total return on Altria stock, including dividends reinvested, is 58.94%. And historically, believe the Altria Group is actually one of the best performing stocks in the stock market. Since 1990, it's had just under an 11,000% total return. And while this was a weaker return over the past 10 years due to many factors I've covered in prior stock analysis videos on Altria, the past 3 years have been pretty great. It's a 71% total return. And this is the time period where I've been buying the stock. Then also with dividend investors, I would say you have a class of retirees that like the stability, safety, and growth that dividend income can offer. And this type of dividend investor will build their portfolio around the dividend aristocrats and the dividend kings. And you'll have a reliable dividend payer like Coca-Cola in your account with a 3% dividend yield that's growing its dividend payment 4% every single year. The most recent one was actually higher at 5.43%. And I do think that dividend stocks can be a great retirement strategy, especially if you can build it to a point where you can just live off the dividend income and you never touch the principal investment. You let your entire portfolio just continue to grow and grow. And that way you're not forced to sell your portfolio off over time, especially during a time like the great financial crisis. If you were a retiree that had to sell off your holdings, you were selling at terrible prices, crazy lows, and you would have missed out on so much future compounding. Then you have another group of dividend investors that don't want to get as into it as necessarily I do and focus on all these individual stocks and do deep financial analysis on all these different companies. But hey, I enjoy it. I make these videos about it because I enjoy it. And I have slightly beaten the market over time and think I'll do better and continue to improve. But you could also do great just investing into popular ETFs, whether it's the S&P 500 with a VOO, or a very popular dividend ETF like SCHD. Since 2011, that has had a total return of 430% and 202% over the past 10 years. Or you could build your portfolio with some combination of ETFs and a few stocks that you pick out. But all of this is based on your own personal finance goals. That's why they call it personal finance. Everyone has different objectives, but I'll tell you what, I'm excited about the future and I hope you follow along in this journey with me. In the rest of this portfolio update, I'll be sharing more about how my overall portfolio is doing, the individual stocks that make it up, and my newest purchases I made in the past month. If that sounds interesting to you, let's watch the intro and jump into it. My name is Zach, this is Dividend Data, and you should leave a like and subscribe to the channel if you enjoy the video. If you want to use the tool I showed throughout, it is available at dividenddata.com. And now, today is actually the best time to join because you can get 50% off for life as a part of our Black Friday sale. This ends after Cyber Monday, so you gotta get it now. And by the way, you lock in this low price for life. So that means it renews at this discount. And this is the best offer that will ever be available for dividenddata.com. You get all of our stock analysis and portfolio tracking features, plus our new AI investment analyst. And by the way, if you sign up, you can get my new cheat sheet about how to best use that AI tool. And I just made a video sharing the best use cases and prompts. And this is now just starting to become a part of my workflow, and it definitely saves me time when researching. Plus it has this sweet valuation calculator for doing discount cash flows. So if you want to try it out, click the link in the description and pin comment. There's a 30-day money-back guarantee, so no risk in trying it out. Link in the description and pin comment to get the sale directly. Or if you create an account on the web app, select your plan and enter the promo code Black Friday 2024 at checkout, and you will get 50% off for life. And again, this sale ends Monday. And I would like to thank everyone who became a member this month. We had a lot of growth, so the future looks promising. So join now to be a part of that future. But let's get back to my actual portfolio. So as I mentioned, current value is $205,000. I invested $123,000 to fund that account. So that puts me at an unrealized gain of $81,500 or a 66.08% total return. My two top holdings follow that dividend growth total return mindset with Visa and Microsoft. Visa currently sits at $49,000. Microsoft is valued at $43,000. Most of this Visa position I built up this year, so it has a 24.93% total return. And a lot of my Microsoft position was built up in fall 2022, and I have a 77.26% 15% return. And then I have my two stocks with the highest dividend yield on cost. That's the Altria Group, ticker symbol MO, and ExxonMobil, ticker symbol XOM. Altria is valued at $31.6 thousand for me. And in terms of stock price, 2024 has been its best year in a long time. And I think a lot of that was just all the negativity since 2017 finally being out of the way, as they have their failed dual investment in the rearview mirror that has completely been written off and they are no longer involved. Altria has given me a 58% total return. ExxonMobil is currently valued at $19,600. It is a total return of 247%. Then at number 5, we have one of my newer holdings, which is actually a new dividend payer as well. That is Salesforce, ticker symbol CRM. And although they have not outright said it, I do think this will be a long-term dividend growth stock. And all you have to do is take a look at their earnings and free cash flow. This thing is a compounder. I'll probably make a full Salesforce stock review video in the coming week or two, so subscribe for that. My current Salesforce position, I've had it for about a month and a half. That's $12.5 thousand. I have a 12.78% total return. And number 6, I have Apple, ticker symbol AAPL. That's about $12.1 thousand. I have not bought any Apple stock in really the past 3 years or so. So my total return is 95.5%. And my view on Apple is that it's basically one of the highest quality businesses in the world, but they're going through a little bit of a growth struggle and they're definitely trading at a premium. So I think there's far better new opportunities to put your money in. But if there ever was a crash in Apple stock, I would be in on it. At number 7, we have another one of my newer positions, Alphabet, ticker symbol GOOGL. That is a total value of $11,150, and I am actually down 3.18% on it. And a little bit of a spoiler, but this is a stock I have been buying more of, but I'll talk a little bit more about that later in the video. At number 8, we have the T. Rowe Price Group, ticker symbol TROW. That's valued at $9.2 thousand. That's a 26.43% total return. This is one of my higher yielding positions with a 4%. And if the stock market continues doing well, then T. Rowe Price may be an undervalued dividend stock. And we may be a year or two away from another big special dividend from them as well. At stock number 9, we have the Walt Disney Company, ticker symbol DIS, one of my most controversial stocks and also one of my worst investments I ever made. And I did do a little bit of tax loss harvesting on my worst buys for this one, but on what I kept, I'm finally positive again with a 4.2% total return. And I don't know if you saw their recent guidance, but they gave 3 years of guidance with double-digit earnings per share growth, and I think they're going to hit or exceed that. So I think Disney stock will do quite well over the next 2 or 3 years. And I think analysts are starting to realize that with these higher projections. At stock number 10, we have another one of my high yielders, Enterprise Product Partners, ticker symbol EPD. I really haven't bought any of this since 2020, maybe early 2021, and I have a 141% total return. That's about $4.7 thousand of value. And let me tell you, this one has been a case study on the impact of reinvesting dividends. My yield on cost is 10.58%, and from reinvesting dividends, I've earned 38.5 more shares in the company. So that boosts my initial dividend yield on cost to 14.7. And if you are focusing on a higher yield strategy, I would take a look at a lot of these midstream oil and gas companies. EPD is just one example. I recently learned about MPLX. I did that in a prior video, and that has a higher starting dividend yield at 7.41% and is actually growing faster than EPD with a 10.3% 10-year compound annual growth rate. And the most recent dividend increase was 12.53%. And rounding out my dividend portfolio, I have automatic data processing, ticker symbol ADP. This is about $2.8 thousand, and I have a 47.3% total return. So I'm starting to realize I should have bought much more heavier into this when I was first looking at it. But hey, we all learn. Yeah, but this is a company that people think is a boring industrial company, but they're really a software company at this point, and they have a ton of recurring revenue, and they really grow at the rate of the businesses they serve and continue to add new clients. And I would consider ADP to be one of those super stocks if you're someone who wants to eventually live off dividend income. It has a 2.01% dividend yield, but it also has really high dividend growth. The 10-year CAGR of the dividend is 12.13%. The 3 most recent increases were 10%, 12%, and 20.1%. And the payout ratio is sustainable too, with a 60% free cash flow payout ratio and a 58% EPS payout ratio. So as of the last 10 years, we're in the lower part of their dividend yield range, but ADP has been a great compounder over the long term. Since 1990, their total return is over 11,500%. So yes, my dividend portfolio is heavily concentrated in my top picks, and I do this because I'm actively involved in individual stock analysis. If you don't want to do that, then just do an ETF approach. Over the next next year, I'm projected to earn $4,551 in dividend income. That's $1,100 every quarter, $379 every month, $12 every day, and 52 cents every hour. So in the time I'm recording this video, I could get a gumball. And here you can see how those dividends are scheduled to be paid. In December, I'm expected to earn $447, $622 in January, $84 in February. And here we can see some dividend insights on all the stocks in my portfolio. We have the Altria Group at $2,200. This is my highest dividend payer by far. ExxonMobil pays me $658.61. And by the way, I have a 247% total return on ExxonMobil. And that comes from one, buying it at a great price. My dividend yield on cost was 9.68%. But I've also reinvested dividends that entire time, and I've earned 28.3 shares from dividend reinvestment. So including drip shares, that boosts my yield on initial cost to 11.67%. So even though the current yield for ExxonMobil is only 3.36%, that's not what I paid for the position. In terms of optimizing for your dividend income, all that matters is yield on cost, what you paid. So T. Rowe Price pays me $372 in annual income, even though it's one of the lower stocks in my portfolio. And that's because of the higher yield. Visa and Microsoft are my number 4 and number 5 dividend payers at $367 and $338. Over the next month, I've got some big dividend payments coming up from Visa on December 2nd for $91.91, ExxonMobil on December 10th for $164.65, Microsoft on December 12th for $84.67. Then we got Google and T. Rowe Price later in the month. In total, this account has paid me over $15,000 in dividends. That was $3,500 last year. And so far in 2024, $4,000.25 with 1 month left to go. Based on the projections, that should hit $4,500. So I have a $1,000 increase year over year in dividend income. But let's get to my buys. And this is actually pretty simple. I have only bought 5 shares of Google, ticker symbol GOOGL. In total, that was $841.93. That's a cost per share of $168.39. And Alphabet is what I would call a great business trading at a fair price. I wouldn't say they're deeply undervalued, but this is a long-term high growth company with an extremely high quality business model. So being able to get into that at a 22p ratio is not bad at all. Crazy strong balance sheet. Free cash flow per share is growing at a very fast rate of a 10-year CAGR of 20.55%. That is on track for it to be down pretty sizably in fiscal 2024. That's from all the CapEx and investing into AI data centers. That's both for Google's cloud business and for internal use. I'm seeing this ramp up in CapEx across many of my investments, including Microsoft. And strategically, I do think it's the right move so that they can be leaders in that space. But purely focused on the financials, this is really the only red flag I see. Google also recently started paying a dividend for the first time. It's an annual dividend of 80 cents per share, so small right now with a 0.47% dividend yield. But this payout ratio is very low. It's only $2.4 billion a quarter of dividends. And even with the increased CapEx, their free cash flow is over $17.6 billion a quarter. So this dividend is still a drop in the bucket, and long term, they have a lot of room to grow their dividend over time if they choose to. So personally, I think Alphabet's set up for continued long-term growth. Since going public in 2004, Alphabet has a 6,600% total return. And if you want my full thoughts on the company, I just did an Alphabet stock review video. I'll link that at the end screen. So yeah, that is my monthly dividend portfolio update. If you enjoyed, please leave a like and subscribe to the channel. And again, this is one of the last chances to lock in 50% off dividenddata.com for life. This Black Friday deal is over after Cyber Monday. So if you're interested, now is the time. Click the link in the description and pin comment. Thanks for watching, and I'll see you in the next video.